Hello everyone and welcome to today's morning report on Tuesday the 9th of August with me, Richard Perry, market analyst at Hantech Markets. We've got a very mildly risk positive open and also that dollar strength continues that we've seen since that payrolls report on Friday. Let me just show you the dollar strength. We're still running up mildly higher on the dollar, not a huge amount, but it's interesting that that dollar strength is starting to sort of impact back on the oil price, slightly lower on oil. So we've started to see that just pulling back just mildly today, and it'll be interesting to see if that rally high that we saw yesterday around 43.40 could be the basis of resistance, which is coming around about this old pivot, interestingly enough. So we're starting to see the as I said, this dollar just mildly gaining traction. I think sterling is the main one, and I'll talk about that on the in the charts in a bit. But you've got Ian McCafferty, who's one of the chief hawks on the Bank of England Monetary Policy Committee, coming out and suggesting that there was a possibility of even needing further monetary easing. So that those dovish comments from the big hawk on the committee, or the the former hawk on the committee, suggests that perhaps there is further weakness in sterling to be seen, but certainly the dollar is fairly strong today. In terms of economic data, not a huge amount actually. We've got the industrial production for the UK at 9:30. 1.6% is the expectation there on the year-on-year industrial output. So here's the chart. And that would be mildly higher than the 1.4% we saw last month. We've had out the Chinese inflation data today. The CPI is basically in line with last month, but the PPI is the one that we're keeping an eye on because it is continues to improve, back from 2.6% negative to 1.7% negative this time out, and that was ahead of the 2% negative that was expected as well. So that suggests that the factory gate inflation is or deflation is continuing to sort of ease. The deflationary pressures are continuing to ease, so that's a positive for the Chinese economy going forward, I think. But generally speaking, there's not a great deal else other than that, apart from the UK manufacturing and industrial production numbers. So that takes me to my chart today, which is silver. Now, silver has been correcting in the last few days with this dollar strength, but yesterday it found a bit of support. Starting off trading at the low of the day, bounced up and traded higher than the low of the day all day, and that came despite that dollar strength that we saw yesterday. Now it's sort of consolidating a little bit today, but it'll be interesting to see if this continues, because we have got this corrective outlook on the momentum indicators, and we also had a breakdown below 20 figure on the hourly chart. You can see that here. 20 figure was a sort of a minor pivot level, but also a top breakdown, which actually you sort of measure that from, say, 20.80 cents, measured down from 20 figure, gives you 17.20 as a target. Interestingly enough, 19.20 is bang on that support that we saw mid to late July. So there is still a corrective move out there, but yesterday we had that rebound off 1957, and it is holding still. You've got this corrective outlook still on the hourly indicators that would suggest we're still in the sort of just drifting lower. But the fact that the bulls were supporting whilst the dollar was also strong is an interesting turn of events, really, because it would suggest that the bulls are ready to sort of return to this one. Now, I think the equivalent support on gold for that 1920 support is around that 1310 mark on gold, and it certainly looks as though gold is a decent buy around that sort of level. I think gold would be silver would also be a decent buy in the event of this ongoing near-term correction. And I think it is a corrective move that will be bought into. So I'm sort of looking out for the buyers to return at some stage this week, and just find that new support and push back higher again. And 1956 is holding again today, so it'll be interesting to see if that continues. But there is a fair amount of near-term support from those late July lows above 1920 that would possibly provide the basis of support for the next sort of level to sort of springboard from. So it'll be interesting to see what to watch silver, I think, this week. But the near-term outlook is still corrective, as sort of the candles were drifting lower today would suggest. But 1956 as support is still holding, so it'll be interesting to see if that continues. But I wish you good luck in your trading today. You've got a resistance at 1986 and then $20. So I will speak to you later. Thank you.